What happens if you lose your job and you're forced to start a business to survive? We're going to discuss it. Let's begin.
This is Debt Free in 30. Here's your host, Doug Hoyes.
Some businesses are started by someone gathering a group of investors with millions of dollars. But most businesses are small businesses started by one or two people with very little money. How do they do it? And why? My guest today is David Barnett, who will answer those questions and many more. Now, David, you'll remember this. Your first appearance on the podcast was recorded right here in the studio in Kitchener on March 9th, 2020. That was 8 days before the world shut down and we started airing special episodes of Debt Free in 30. So that episode didn't air until June of 2020 when I had you back for a video update because so many months had passed. And of course, the world had totally changed. So you came in and we talked about debt traps of buying a business. And then you returned for episode 354, bad funding choices for small businesses. And then you came back again for episode 463, want to buy a business? Here's what to know first. So I will put all of those links to all of those episodes in the show notes because I think they're all still very timely. So David, welcome back. How are you doing today?
I'm great. I'm happy to be here for the fourth time on your show. I heard somewhere that if I appear 5 times, I get a debt-free in 30 jacket.
That's correct.
I'm eagerly working my way towards that.
And a mug and $10,000. So that's our new thing. We should get some jackets. I like that. I like that idea. So, okay. So let's get right to this because I hate these podcasts where people chat about the weather and everything. Let's get right to it. Question number 1. What makes you so smart? So why am I talking to you? What makes you an expert on starting a business or buying a business?
Yeah, sure. So I'm an entrepreneur. I've started businesses. I bought them. I've closed businesses and I've sold them before. But most importantly, I've worked as a business broker. And so in my business brokerage career, I helped people who got into business either by buying or starting them. And I helped them sell businesses. And I just crossed paths with so many different people that were in that space. Since my business brokerage career, I continue to work with people who are doing deals as a consultant. And, I don't know, when did I start with this? 20 years I've been working with people who are entrepreneurs. And it's always around these questions about exiting or buying or starting or improving or growing. And so, there's my own experience, but more importantly, there's what I've learned from all the people that I've worked with over the years.
Fantastic. You've put in the reps. So that means you're a very old man, obviously many, many years older than I am because I'm 35 years old. So now you have a new book. And I'll put a link in the show notes. People who are watching on YouTube can see the picture in the background, but we'll put it up as well. It's called Buying versus Starting a Business. Search or Startup, a guide to keep you from going broke. So I really like that part about going broke because, of course, I've dealt with lots of clients over the years who got into business. It ended up not working, caused a lot of debt. So the book was released on September 2nd, 2024. So it's a very timely discussion we're having. It's available as a Kindle book as well as an audio and a paperback. So I think it's a great investment for anyone thinking of buying or starting a business. I've read it. I think it's a good book. It's very practical. I liked it because it was short and to the point. It's not 800 pages of a bunch of theory. You can read it in a day or two. It's, very succinct. And I want to start out by reading an excerpt. Okay?
Sure.
Might be the first excerpt of your book on a podcast. So this is from lesson number 9, being creative and resourceful when you need to be. So here's what you had to say. In my years as a business broker and private transaction advisor, I have always asked the business sellers I've worked with why they got into business. We may imagine that there are a lot of generational businesses or people who started up because of a dream to create the perfect business, but one answer surprised me at first, until I heard it over and over again. I needed to start a business. I was forced to. I didn't have a choice. I had responsibilities and needed an income. Yes, necessity is the mother of invention. Many of these forced entrepreneurs came to the field of business ownership with very few resources to speak of. So I agree with that. And the reason I wanted to do this episode was exactly because there are a lot of people who get into that exact situation. I have no choice. I got to start a business. I've gotten laid off. I've put resumes out there everywhere. I can't find a job in my field paying enough, whatever. So I have to start my own. So for the purposes of our discussion today, and I know you deal with all sorts of entrepreneurs and business people and everything, I want to focus this on just people who felt a need to start a business because they had to, or a need to purchase a business. So it's out of necessity. That's what we're talking about today. So question number one, and we got lots of questions, but the first one is, so I'm in this position. How do I choose what type of business I should start?
Yeah, it's a great question. And, one of the other things that I spend a great deal of time in the book talking about is how a lot of the content, media, books, etc., about the idea of starting a business is not really geared around the reality of the people you just described. When you read a lot about startup entrepreneurship or even more academic oriented things about how people get into business, you read a lot about people that identify a need, and then to your point earlier when you made the introduction, they go about creating a business and they find investors and all this kind of thing. But that's not how most businesses get started. The way most businesses get started is by a person that says, what can I do of value quickly to bring in some money? And this comes back to understanding, who am I? What talents, skills, et cetera, do I have? What experience do I have? And what resources do I have access to? Either my own stuff or maybe things that belong to people I know that I can somehow borrow or use in the pursuit of getting some money. And so there's actually a term that's been coined for this in some research that happened over the last few years called effectuation, where they actually study that entrepreneurs who are these scrappy startup people, they don't look necessarily for the opportunity that the market is demanding out there. They don't look for what people are looking for. They just look at, what can I do and what can I control that someone's willing to pay for? And then they're willing to build and iterate upon that as they get going. So somebody looks at their past skills. They say, geez, I used to do this function in a big company. Maybe I could do that. For some smaller companies, maybe they can't afford a full-time person to do that. But if I can piece together enough of these small companies to be my customers, maybe I can create a full-time income by doing this thing that I was doing, some kind of IT skill, or maybe as an HR director. Small companies need someone to help them with hiring or some other HR function. And you think, if I can piece together enough of these people, I can make a career out of this. Now, when you start, you may have an idea of what people want help with. You may initially create some kind of offer. Hey, this is what I can do. And in talking with the prospective customers, you may hear back feedback that lets you understand that, hey, people don't quite want what I'm trying to offer. There's this other thing they seem to have a problem with. Maybe I can address that. And so you iterate as you go. This constant sort of reformatting, right? And I mean, just look at your own experience with yourself and your partner. When you decided to go off on your own, you knew what? You knew how to be a bankruptcy trustee, right? And so it was like, how can we deliver this in a way that makes sense and bring customers through the door? And I would imagine that perhaps you've iterated or changed the way you've done business a little bit over the course of your years, correct?
Yeah, absolutely. Like every day. When we started, Ted and I, 25 years ago, because we were, I guess, 10 years old at the time, all of personal bankruptcy, insolvency work was primarily done by large accounting firms. We had both worked for the big accounting firms, KPMG, PwC. Ted was with Deloitte's, and it was, very big accounting firmy, and we decided to make it much more personal. But you're right, there was a lot of iteration involved to get it to where we are today. Now, it's very interesting what you said, because you said that traditionally a business would be, let's figure out what the market is and do that. Whereas you're saying, well, no, a lot of it is, what can I do? It starts with me and then figure out what can be done. So what kind of...
Well, hang on. I'm talking about the traditional literature.
Right.
So the books out there, the academic research, this is the way they approach it. Because you know what they're talking about? They're talking about Elon Musk and Facebook and all of these big sort of examples of extreme entrepreneurship. But as you know, the vast majority of businesses are the little ones. have the mom and pop kind of businesses that people create because they need an income.
So how does one do that market research to figure out, okay, I know what I can do. I'm a licensed insolvency trustee. I'm an IT guy. I'm a roofer, whatever it is. How do you then do the market research to see if there's actually a market for that? Is it as simple as, well, get started and see what happens, or is there more to it than that?
Well, I think that entrepreneurship and starting your own business is the original gig economy, right? I mean, we use that term when we talk about people delivering food for Uber Eats or driving, for Lyft or what have you. But it really comes down to making a sale. And so I will sometimes meet people that have a startup idea and they'll say, hey, this is what I'm thinking of doing. And they'll get bogged down in the administrative minutiae. They'll ask, about registering their company name and all this other kind of stuff. And maybe they've found some kind of guide online that says, here's what you need to do to start a business. And I'll get some of those people to pause and I'll just say, hey, wait, let's stop for a minute. Do you know people really want to buy it? And the only way you're going to know is by making a sale. And so you can go out there, you can try to figure out who would likely want to buy my product or service. You can test the marketplace by making offers to people, by putting up a website or, having people click to buy. Even if there's nothing to sell, you can just, reply back and say you're out of stock, right? There's all kinds of ways you can test and see if people really do want what you have to offer. And then if you are able to make sales and it looks like you've got something there that will work, then you worry about getting all the other stuff set up so that you're compliant and, you're going to file your HST on time and that kind of thing.
Which is important. Yeah. And if the premise of this show is, well, I've gotten laid off, I don't have a job, I guess I got all the time in the world then to try all these things. I can design a website and start making sales and all that. If I'm working full time at another job, okay, I guess I got to be a little more strategic about it because I can't put 80 hours a week into both of my different jobs. So back to my original question then, I got no money. I've lost my job. Maybe I've got some debt. I got to generate an income. What kind of businesses can I start with no money? So you gave the example of Elon Musk, who's, he didn't start it, but he runs Tesla. I assume you need a few $1 billion to start a car company. So let's scratch that off the list. What kind of businesses could I start with little or no money?
You are almost certainly going to be in the realm of service for two big reasons. Number one, most service businesses do not have a lot of capital components, right? So you can, and the big capital items you might need in a service business are more likely able to be financed, leased, et cetera, or even just rented. So, one of the businesses that I started, one of the first businesses I started when I left my first, quote unquote, real job was a junk removal business. And if you've ever seen, 1-800-GOT-JUNK, for example, we kind of borrowed their business model. I've coached a lot of other people on how to start a junk removal business. And a lot of them start just by working on Saturdays and they'll make bookings with U-Haul and they'll just rent trucks from U-Haul and go out and do junk removal with a U-Haul rented truck, as an example, right? So it's a way of getting around that whole capital investment. The other big thing with service businesses is the cash flow or cash conversion cycle, as they call it. So if you're going to manufacture a product and ship it to another business, in all likelihood, that other business is going to think that you are going to give them 30 days to pay, for example. And so this means that not only do you need to invest in the machinery, the inputs, et cetera, you also need to have capital to finance accounts receivable. That's, again, a lot of money for most people, right? But in the world of service, most of your customers are going to expect to pay when they receive the service. So if you think about anyone that comes to your home to do anything, they might do something at your home, whether it's fix the furnace or paint the fence, and likely at the end of the job, they're going to get paid. Now, as you grow out a service business, initially, you might be the one who's doing the service. But if you get busy and you need help, you can start to hire people. And here's the neat thing, is that most people that work at a job, they work for a couple of weeks, and then maybe there's a couple of days delay before they get paid, right? In essence, employees provide operating capital to a business because they will work and be paid later. And if you can get paid by your customers before you have to pay your employees, you can grow a service business very quickly. The downside to service, few barriers to entry, lots of competition, of course. This is going to have an impact on margins. But if you need to find something to generate cash, look for something that people don't like to do, that you maybe have some knowledge of, and that might be the solution for you.
And so you've given us some examples there. A junk removal business. Okay, nobody likes to do that. Anything around the home, painting, landscape. I'll cut your lawn. I'll dig out your plants. I'll cut your trees. I guess you'd need some experience to be doing that probably. And are there any other obvious service businesses that pop into your head that someone with, not years and years of experience could explore?
So, if you don't have, that highly marketable, high value skill, like if you're not coming out of some kind of specialty professional sort of practice, then you are going to be entering a very competitive world filled with lots of people doing lots of things. My advice would be to listen for the complaints. So just down the street from me, there's a fellow who is semi-retired and he's a handyman, right? And I talk with him from time to time, and he jokingly told me that his marketing strategy is returning his voicemail messages, right? And so the reason why that can be a marketing strategy for a handyman is just that there's such a shortage of them that people struggle to find people who can do this kind of thing, right? And if you listen, or if you look at neighborhood Facebook groups, for example, you will see people posting questions like, who on earth do I call to get this done at my house? Or who can I find that can do this for me? Those are cues that there is a demand for something, and people are frustrated by the ability to find someone who can do it.
So we mentioned the whole funding aspect, because again, we're talking about people who don't have a whole lot of money. So your advice was, number one, rent whatever you need. Don't go out and buy a truck. Rent a U-Haul on the weekends or for a day at a time. I've got a job. Okay, I'll rent a truck. Otherwise, I'm not buying one. You talked about as you get bigger, you have employees, and I agree. Employees get paid at the end of the week or every 2 weeks. So if you're doing jobs at someone's house and every day you're getting paid, then that becomes a source of funding because you're not paying it till the end of the week. Are there any other obvious sources of funding when I'm starting a new business like this?
Yeah, I mean, most people get started just with their own cash savings or, a credit card or something. But one of the big things that has changed in our world today than even just what existed 15 years ago is this whole idea of software as a service. So once upon a time, if you wanted to have a point of sale, for example, for your business, you had to invest a lot of money in, software licenses or equipment and things like this. And now if you do services at someone's home, you can often have a payment system operating on your cell phone, right? And that whole thing is just either going to cost you a percentage of each transaction or maybe some kind of flat monthly fee. And there's examples of this all around where at one time, a retail store had $1,000 cash register. Now you have, just a tablet that stands there and it's integrated with a point of sale system. So a lot of the systems, the overhead, the complexity, the tools that it used to take money to buy in order to run a business efficiently, you can all just kind of subscribe to this stuff. And again, I know you probably don't like the idea, but if you just put it on a credit card and you are making sales and making money, then you can cash flow it, right? It's a real democratization of business startup that we have today. It's really great.
Yeah. And so what you're saying is don't buy it if you don't have the money to or don't need to, in effect, rent it. And so we all understand renting a truck, but you're right. Your idea of renting the payment terminal, which might not even be something you rent, it's right on your phone now. And, we've certainly experienced that. A guy comes to your house to, take away that hornet's nest that you don't want to deal with on your own. He whips out his phone and okay, click, click, click. There's your invoice. I'm going to send you the thing. Boom, boom, boom. And you do the e-transfer and it's paid for. So look for ways to rent as opposed to buying. And rent, I'm putting in air quotes for all the audio listeners because, as you described it, software as a service, I'm paying a percentage of, maybe it's a 1 or 2% fee, but I didn't have to buy the fancy cash register up front. But what if you take it one step farther and, okay, I lost my job. I've had to use debt to survive. I've already got debt. Is there any other ideas you've got for financing a business that we haven't already talked about? So I'm already maxed out on my credit cards. I guess now I'm talking about, I got to talk to family and friends and things like that. Are there any other sources of funding other than that?
Well, not often. I mean, the vast majority of new business startups, like real small businesses, are financed by the savings or credit of their owners. I guess my advice would be is just to not let yourself get to that point. Like if you lose your job, you typically have some kind of severance or employment benefits that are going to be kicking in. And so finding a job is often what people's strategy is. I'm going to go out into the labor market. I'm going to find something else. I would say that starting a business for a lot of people is a plan B. They don't necessarily want to be in business for themselves, but like anyone who's trying to be prepared and cover their bases, I would say, as you're doing your job search, maybe you should be spinning up some ideas and maybe you should have a concrete plan. Like if I don't find a suitable job in 4 weeks, I'm going to start trying to create some kind of revenue. Even just to give myself some cushion as I approach the end of my unemployment benefits. Or for a lot of people, with the way that housing is, their unemployment benefits may not even be enough for them to make ends meet. And so don't delay. Don't come at business from a point of desperation. Come at it when you're still in a position to make some choices and you've got a little bit of runway left.
Well, and I would take it one step farther and say, why not you start thinking about it today? So, okay, I've got a job and I'm, doing okay, but no job is 100% secure. You never know, the market changes, the company gets into trouble, whatever. And I think the question we should all be asking ourselves, well, if I was to lose my job tomorrow, what would I do? And if I already have a side hustle, either up and running or at least thought out, then it's really easy to transition to the side hustle. Your earlier example about the junk removal, well, I only do it on Saturdays. Okay, well, I have my full-time job and a couple of Saturdays a month I do junk removal, so it's there. And if I need to spin it up to something more permanent, then I can. So the title of your book is Buying versus Starting. So a small business. We've talked about starting, so let's talk about buying. In fact, why don't you just answer the question posed by the title of your book? Should I buy or should I start a business? What's the thought process in that? Now, off the top of my head, I'm going, okay, I understand. Buying a business, you got to have money. That's what buying means. So it seems like a silly question to ask. Obviously, if I don't have any money, I'm going to have to start as opposed to buy. But we've already talked about starting a business does actually cost money. So walk me through the thought process. How do I decide whether I should be buying an existing business or starting a new small business?
Yeah, it all comes down to risk. So if you buy an existing business, then you're buying a business presumably that has a steady and measurable cash flow that you can rely upon. So there's less risk, but to your point, you need to have more resources to do that transaction. You can find stuff online that talks about this idea of buying a business with no money. The problem is, in my experience, is that usually those are not very good businesses, and you may not want to buy a business that doesn't make any money, that is unprofitable, because not only do you have to still probably face transaction costs, but then you have to probably finance some losses while you try to turn it around. If somebody with resources, if you've got money available, I would typically recommend that people buy a business. Now, the risk in buying a business is that if you overpay for a business, you could end up with all the risks of a startup anyway, because you inherit what's called financial risk. You then have this debt service payment that you have to cover every month. And so overpaying for a business, in my opinion, can be just as risky as starting one.
And so the way I would buy an existing business with no money is what, essentially through a vendor take-back financing? Is that the obvious way it would happen?
So, if there are assets in the business, you might be able to finance them. But the problem is, if you have none of your own money, a bank is not going to see that as a good loan risk, right? Because you're not going to have an adequate debt to equity ratio. So you're going to have to find a seller who is in a position where they know, like, and trust you enough to be willing to hand over the keys of their business and accept money over time. So that would be a 100% seller financing arrangement. And in my experience, that generally only happens in two scenarios. Maybe the seller is your parent, or maybe you've worked in the business for a long period of time and the seller really knows and trusts you, and maybe you've already worked as a manager in the business. I've seen those two scenarios play out. I have very rarely seen a solid, profitable business approached by a stranger in which the seller decides to give that successful, profitable business to that person in exchange for payments over time with no down payment of any kind. It's just, if you owned a great business, there are so many other more lucrative and lower risk ways to sell the business that you just wouldn't take that kind of arrangement unless there was some real pressing issue at hand. I don't know, maybe if you'd been convicted of something and you were on your way to the big house, maybe. But
that's why I sold my first business. Had to go away for 5 years. We won't talk about it.
It would be an extraordinary situation.
Well, and there could be medical issues. You could be going through divorce. Or it could be that other purchaser is already in the industry and they're going to be coming into my market and blowing me away anyways. So maybe now's the time to sell to you. But I totally agree. If I'm the vendor, if I own a business and I've operated it for 20 or 30 years, why would I just give it to you for nothing? There's somebody out there who will give it to me for something, or I can just gradually reduce my work hours and kind of milk it till it dies. If I'm not getting anything anyways, why not just do that? So I agree. Very difficult to buy a business that's actually profitable and doing well if you don't have any money. And I also agree with you. Banks only lend money to people who don't need it. That's, I think, how lending works, right? You got a house worth $1 million with no mortgage. Sure, we'll give you $500,000 to put into a business. You don't necessarily need the money, but you've got the collateral. We'll do it. Is that kind of how banks work?
Well, for business lending, if you're going to buy a business, the bank will look at the business. They'll look at the cash flow of the business. They'll test to make sure that there's an adequate cash flow generated from the business to make the debt service. But then they're also going to limit the amount that they're willing to lend based on sort of tangible assets within the business. There's a couple different government guarantee programs that help them do this. But one of the hard and fast rules that most banks have is this idea of a minimum debt to equity ratio. And it's just the way that the bank measures risk. So they want to make sure that the person that they're helping to get into business really has something material at risk to lose. Because in their experience as lenders, they know that if you've got money on the line, you're going to work really hard to try and make sure you don't lose that. And that helps to protect their position. And so if you manage to convince a bank to lend you all the money to buy a business, let's just say you did that and things don't go well, then you could just go see Doug Hoyes and declare bankruptcy, right? Like all the risk would be on the shoulder of the lender. There would be nothing really driving you to do whatever it takes to succeed. And that's what they're looking for. That they don't have the capacity to run the businesses. They need to make sure that they make an investment in someone who's got the skills and capability and is going to stick through, sort of the thick and thin to try to make things work as much as possible in order to protect their position.
Yeah, it makes sense. And by debt to equity ratio, well, the business owns this truck worth $100,000 with no loans against it. The bank will not lend you $100,000. Maybe they'll lend you 50. Maybe they'll lend you some lesser amount. You got to have some skin in the game.
Yeah, exactly. And you can get financing for certain things to a higher degree. Like if you buy some new piece of equipment, you might be able to get lease financing for the full value, et cetera. But again, if we're talking about buying a business, the lender is going to want to see you putting something in.
It's as simple as that. So final question for you then. Are there any other things that you want to throw out there? Any financial considerations, legal considerations, or just big picture things that people should be thinking about? Obviously, they're going to buy your book and get the full picture, but anything else in this whole discussion of I don't have a whole lot of money, I'm thinking of buying or starting a business, what should I do?
Yeah, I think it's don't be afraid to reach out for help from the people in your network. And so you've got people that you've worked with, you've got family members. Somewhere in your network of people, there are going to be some business owners, and figure out who those people are. so that you can kind of have a team of people that you can talk to, even just to have conversations about your ideas as you're considering different things. You might see a business and you might think, wow, there's a real need for that business. I could do that. And someone in your network may have some experience with that kind of business and may be able to offer some insights or share some secrets or observations or a comparison to maybe to the business they're in. And it can be very helpful for you in flushing out those ideas. You are going to have to imagine what it's like to both deliver the service, to manage employees, to market, to find the customers, etc. And so you need fuel for that imagination to really plan out how this is going to work. And then I would also suggest you're going to want to put it down on paper. You're going to want to create, even if it's just for yourself and you're not going looking for a loan, some kind of business plan. So you're taking a look at what exactly do I need to put up? What are the expenses going to be? What are the risks going to be? And what's the downside if it doesn't work out? You business people everywhere are trying to figure out how to maximize their cash flows from the minimum amount of investment. And that's the way you need to approach it. And if there is some big degree of investment in some way required, then the question you need to ask is there some way that I can achieve this or do this or deliver the same result for my customers without making that investment? And that's going to lead you down avenues of thinking like what we suggested there with the U-Haul truck.
I totally agree. And I totally agree on the professional advisors. And again, I'm biased here because in addition to being a licensed insolvency trustee, I'm also a CPA. I believe you should, once you've got the business idea and you're going to start making sales and everything, you really do need to talk to either a bookkeeper, an accountant, a lawyer, something in terms of getting things set up. Because the worst thing that can happen is a year and a half later, it's time to do your first tax return. You go, oh, wait a minute. I haven't been collecting HST. I haven't been setting aside enough money. I didn't know about payroll deductions. And now you're, as you say, coming to see me, which is not a good idea. So, okay, I think that's an excellent way to wrap it up. So for the people listening and watching, I'm going to put links in the show notes to everything we've talked about, your website, your YouTube channel, Twitter, and everything. Where is the one place that you would like, or one or two places you would like to send people to find out more, not just about your book, but about everything you do?
Yeah, sure. So the central place where all my content kind of orbits around is my website, davidcbarnett.com. That's my blog site. And I've got a YouTube channel and podcast. And if you type David Barnett small business into any, sort of service, you will find me. And I regularly publish content about buying, selling, financing, and managing small and medium-sized businesses. There's hundreds of YouTube videos and podcast episodes. So if you're just interested in the topic, you want to dip your toe in the water, come on over. There's plenty of content for you to consume and learn about this stuff.
Fantastic. And as I said, I will put links to all of that in the show notes, including links to your new book, your YouTube channel, website, Twitter, X, whatever it's called these days. So David, thank you very much. We are now in season number 11 of Debt Free in 30. And my goal this season is to focus on practical advice. So if you have debt or want to avoid it, please like, subscribe, and leave a comment on YouTube. Click the notification bell. You know about the notification bell, right, David? You click that all the time. Yeah, absolutely.
I hit it all the time.
There you go. So you're notified of every new episode we release on Saturday morning. And if you don't want to see my smiling face, no problem. Most of our listeners listen to the audio version of Debt Free in 30 on Spotify, Apple Podcasts, and all major podcasting platforms. So again, please like and subscribe. David, thanks very much for being here today.
Thanks, Doug.
Thank you very much. That is our show for today. Thanks for listening and watching. Until next week, I'm Doug Hoyes. That was Debt Free in 30. Or in this case, 34. But hey, who's counting? So excellent. No, I think that's good. We covered a lot of ground there. And I'm just going to make sure that, so davidcbarnett.com, because I've got investlocalbook.com here as well, which they probably all go